I mean, we focus on master limited partnerships because they're energy infrastructure. Yes, it's great that Congress created this nifty little structure back in 1986. I'd call it the analogy to REITs, for example, as real estate and commercial buildings are to REITs, energy infrastructure is to MLPs. And that's terrific that there's some tax advantages embedded in there. But the real story is that it's the only pure play public way to gain public equities exposure to energy infrastructure. And that's the theme that we find very interesting. It's very surprising to us as we talk to institutions and portfolio managers that while people have a knee-jerk REIT allocation, if you will, in their portfolio, that they don't have an allocation to master limited partnerships. So as we think about the broader investment scheme, as we think about people's allocations to infrastructure more broadly, whether they think about that as toll roads or airports, it's interesting to us that people don't focus more on the backbone of U.S. energy infrastructure, toll road business models that don't take title to the commodities that they transport. It's a terrific business. We think it makes a lot of sense whether you're an institution matching off assets with liabilities, you're an individual investor that's looking for yield. We don't really think of ourselves as MLP investors or even energy infrastructure investors. We're investing in assets, and we don't apply a specific valuation methodology because the market says that's okay. If you look across MLPs, utilities, other types of stocks, there's often relative valuation metrics used, and whatever the market's doing, that seems to be okay for those stocks. We really want to think about the intrinsic value of these companies. It's much more of a private equity philosophy in terms of our approach. When we're thinking about a company's energy and transportation assets, we look at it from the perspective of what would we pay for those assets to bring them onto our own balance sheet? If we were a private equity firm and we were purchasing those assets, what would they be worth? What's the net asset value? We don't care what the market's trading at. We're concerned about the type of cash flows that that project is giving off and what the appropriate discount rate is given the underlying business risk profile for the cash flow volatilities of that particular asset type. So we're going to take a much different approach, I think, from the market in terms of thinking about value and how we turn that into our portfolio approach at Alarian.